Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 30th, 2021. As always, don't forget to hit the like button and subscribe to this channel. We'll look at important support and resistance levels for stocks. I mean, there's really not much resistance because we're above all support right now. Look at municipal investment-grade corporate bonds. They kind of look vulnerable, so we need to be on the lookout for more downside for various bonds, including TLT. So we'll look if interest rates are about to continue higher. And a couple of trade examples: UPS up over 78% since the latest alert, and Google up over 65% since the latest alert. So stay tuned for a detailed explanation of each trade. Dollar is likely bottoming. We'll look for some, I'm thinking, going to be pretty explosive action in gold and silver arena, as well as other forex instruments. So we're looking also at two of my other newsletters. So this is Elite and Speculator newsletters, which are paid newsletters. I'm going to cover all of these for the Elite newsletter, and the Speculator, you can see there's quite a bit of different speculative stocks, and sometimes not so speculative, but they just have really good patterns, and I like to share them with my subscribers. So throughout the presentation, again, I'll be using my proprietary MasterChartsTrading.com price action indicators, which are available if you go to Master Charts Trading. You can also go to everyonecantrade.com. That's everyonecantrade.com, and sign up for trading indicators. I simplified the checkout, so now we have two products, and separately, if you like to order advanced scanner screener, you can order that. Alright, let's get right to the presentation. Looking at S&P 500, at new records today following, or rather yesterday following the speech from President Biden. Clearly the market is reacting positively, but then again, the market has been reacting positively since April 2020, and this was the important event back then. And again, if you are my subscriber, and we have some subscribers that have been with me since the inception in 2015, so it's been 6 years since I had this service. And if you're a long-term subscriber, you will know that these are actual alerts back in April of 2020, and since then we didn't exit. We would still be trailing at this blue line. So the trailing and the blue line, meaning that, you know, as the stock makes a new high, we simply move our stop forward higher and higher and higher. So we are still technically open. For example, some retirement accounts are still open. New records, and we're looking at pullback levels, and where are those pullback levels? So again, I'm looking at my indicators, and I use them exclusively to trade. What do? They do multiple things. So number one, they set the trend. So you can see that once the breakout occurred back in April, that was the bullish breakout. So it set the trend once the breakout occurs above the blue line. Okay, and then the other thing is we can kind of predict where the pullback will occur, or to what level we can expect the pullback to unfold. So for example, recent pullbacks were to the green line, and basically just stopped there. We can kind of see that it's bottomed and then rallied above it, bottomed and then rallied above it. So me personally, I prefer to buy around the blue line, and there wasn't a pullback like that. I should further add that we're going to remain bullish, in other words, thinking that the stock market will continue higher until we see a close below the yellow line. So you can see that it is a tremendous distance right now away from the yellow line. So possibility of a bear market to me is quite remote. I mean, of course, one day it will be the top, but we don't know when that day could come. It could come in 5 years, or as President Biden said, 8-year plan. So maybe the top will come in 8 years. But right now, we can only guess where the top will be, and I don't want to guess. It's quite quite useless to do that. Everybody wants to know where the top will be. Nobody really knows that. So here's Nasdaq QQQ. It was underperforming a little bit, but overall, you can see it bottomed at this green line, the weak support. So currently this weak support is 321. So if you just hell-bent on trading this particular thing, QQQ, then go for it. But the point is that there are many other opportunities out there. In fact, this is why I'm showing all of these ideas, is that we are actually trading all of these stocks, and we're not really just stuck with one security. We have a lot of securities to trade, and thus we diversify, and then also we don't get bored, right? Because this is the latest opportunity to buy QQQ was back in April of 2020. To me, I mean, I wouldn't buy it any other place because I want to see a touch of the blue line. So there was not opportunity. You can see there was not a touch of the blue line since April of 2020. So that's a year ago, you see. Here are small caps. They're somewhat different, but overall similar. There's something called correlation. I'm going to show it in just a second. So here's correlation. This is correlation to the S&P 500. So the more positive it is, right now the zero is, you can see that it doesn't even go like one time right there. It went below zero on the September 2020. But overall, in other words, S&P was doing one thing, and IWM, the small caps, were doing something else. But by and large, they do the same thing, you see. So what I'm trying to say is we can capitalize on the slight differences in the instruments and the way they behave, and that's how we can diversify, not only through buying different instruments, but we can also diversify through buying different instruments at different times, and thus there is less chance of larger losses, or let's say both S&P and small caps drop, and you had large enough positions on both. Correlations are high, so overall, if both of them drop, your loss could be quite large at a particular moment. So to minimize on that, we can buy different instruments at different times. And for example, another way to control for this is to wait for one of your trades to come into money, become profitable, then open another one. Multiple ways to deal with this issue. So this is why we have many different instruments to trade, and you can see that, for example, Nasdaq QQQ broke out in April and never looked back. But small caps broke out in May of 2020, and they had several more opportunities to buy around the blue line, you see. But then again, lately, since September of last year, there was just no opportunity. Weak support right there where I'm hovering, 25th of March was touched, but other than that, no opportunity to buy. Okay, so switching gears, now we're looking at municipal bonds, and people like to buy municipal bonds, in especially there are closed-end funds that carry municipal bonds a lot. So this is ETF, MUB. But by and large, once again, there are the correlations between various municipal bond funds, be they, they could be closed-end funds or they could be ETFs. There's probably hundreds of them right now, out there. The correlations are high, so I'm going to just give one example. So, for example, MUB here, municipal bonds. What really bothers me here is the distances between the yellow and the green line. You see how wide they were just recently here, and let's say even as early as just March of this year. So this is, what is it, 11 points width between the yellow and the green line. So again, I don't reveal the code, but you can have the same lines, this MasterCharts Trading on your chart, and then you can be trading together with me. They're not expensive. And you can see that then right now the trading range, the distance between these two lines is 4.1. So that's more than half distance. So what that means is we're looking at possibility of a trend change. So if until recently the trend was clearly up and we were buying municipal bonds, so for example there were a couple of opportunities back in April and of 2020 to buy them, and we actually send them out as an alert, and you are very profitable. And what's happening now is that you are approaching the blue line. So if you bought it way back when, for example in last year, I would be thinking about exiting now. I would be thinking, okay, this is getting close to my where I want to be exiting pretty soon. Additionally, if we look into the future, these are my lines projected into the future, you can see it gets even more narrower. I mean, look how close together they are. So what that means is we're looking at a potential for a trend change. So if before we were looking at bonds, these municipal bonds as bullish, all they need to do is move towards the yellow line, which is not that far away. It's just a few percentage points away, really. You can see that all municipal bonds need to do is drop like around 2%, and then they would enter a bear market. What does it mean? That means that people like me with the various algos, so this is algorithm, it's algorithmic trading, because I know how to interpret these lines because they behave due to an algorithm, and this algorithm is visually represented, so you can see it. When the stock in the future will close below the red line, but more likely the yellow line, I like to see a little bit more of a downside pressure for this type of instruments. Then we're going to be in a bear market. So what does that mean? That means if we then we'll start thinking about shorting it. The algorithms of this type will think, oh, okay, looks like we have a new instrument in a bear market. Let's start to think about shorting it. So not a great sign when the municipal bonds enter a bear market. They haven't yet, so we'll see if next few weeks what the behavior will be like. Same goes for LQD. You can see LQD, the investment grade corporates, already broke down. I think this is basically already a bear market for investment grade corporates. So far, not a lot of downside pressure. So another thing is that even though we're thinking now we're in a bear market, the bull market is also not that far away. So this narrowing of a trading range, it's like a double-edged sword. So yes, you can change the trend into a opposing. So if it was up, now it could be down, but also you can just as easily have a whipsaw. This trend change would just reverse in a few days. So we need to be kind of more on our feet. We need to be really thinking about and really paying attention here what's happening to the price action. So right this instant, I would not have any LQD in my portfolio for sure. Here's TLT treasuries, and here people what people like about my style of trading is it's so obvious. You can't really miss it. There's the breakdown on the 6th of January, and then there's an opportunity right there on 27th of January. So yeah, really good trades right there. A couple of people from my subscription list were able to get in. Right now, it looks still very weak. Right now, TLT kind of is bouncing at this weak resistance. So when we're coming from the bottom towards the lines, then we're coming towards resistance, and it's so resistance, yellow and green lines, they're kind of weak resistance and support. But even here, the bears are already taken over. So it may not go any further. It may just continue lower, make a new low. And by extension, TYX, will make a new high, because TYX is the interest treasury bond yield. So from, this is the 30-year treasury bond yield, but the 10-year treasury bond yield also is used to set the interest rates. So you will most likely see higher mortgage prices, higher interest rates on whatever things, like credit cards, etc. So yeah, there is something to be said about breakdown of bonds that occurred, coincidentally or not, in this date of the insurrection. A couple of trade examples, just a completely, home run trades for our non-American listeners. I'm referring to baseball, of course. Anyway, so here is the UPS, and let's think back. Okay, so let's pretend that we're back in May of 2020, and you can see there was an avoid on the 25th of February. So what does that mean? That means if I had any positions, I would exit, even if I was a losing position. And at that point, we just do nothing. You will have some losing positions. I have about 25% losing positions. I have about 75% winning positions, and I make $3 for each dollar I lose. So last year was just a blockbuster year. I doubled my account last year. So let's say we're back here in June of 2020, and I don't know, we're depressed that UPS is going down, and there's this whole pandemic happening, and there are lockdowns. If you guys remember, it was quite recently, back in March, April, May of 2020. There was just nothing good was happening, really. All of a sudden, here on the 8th of June, we see a breakout, a close above the blue line. I mean, we don't know what happened. I mean, we could look at the events, and if you're a very good historian, you can trace what happened. But truly, you don't really need to know this stuff. So actual alerts, we started buying. I sent to my subscribers. Here's on 23rd of June. I wasn't really thinking about why UPS, why is this happening in the middle of a pandemic plague. We were just buying. This is algorithm. You see, this is algorithmic trading. So we bought back in June of last year, and we're sitting in a position. All of a sudden, it explodes higher. You see how it didn't even retest where we bought. This is my favorite type of trades, when they just take off and continue higher, especially when they gap up and there is no risk of you being stopped out. So at this point, sometime in July, you're like, okay, this is nothing to worry about, and it just keeps going. Look how far it went. So you sit in the position and you do nothing, especially if you bought options here. Oh my, this is a killer trade. So here's an opportunity to take profits on 28th of October. This is when I usually take profits. You can see the price comes up above the green line, it comes down below the green line. This is a sweet spot to take profits, especially if you had options. But if you did nothing and you're sitting in the position and you're just trailing at the blue line, and let's say you had options like a year or 2 years out, you're just sitting there, and it keeps going, and oh my god, it just went to new records. That's 78% gain in about less than a year, since July. So congratulations to the subscribers. Very similar thing happened with Google. I mean, I could go through the entire trade, and let's just really briefly do that as well. I don't want to spend too much time, but again, back in last year, February, March, April, etc. So if you had a position from, let's say, October 2019, you would have exited right there where I'm hovering, 27th of February. You see, without knowing any insider information or anything else. The declaration of pandemic happened March 13th, so you would have been exiting a few weeks before and at a profit already. Something happened again. There was a lot of monetary intervention. There was a lot of things happening. I don't know exactly what caused Google to go up, but it did, and there was the breakout where I'm hovering on the 29th of April. Actual alert again, same thing. So another alert on the 14th of May, and again it continued with trailing at the blue line. We're not being stopped out. Here we would have been stopped out, but then again you can buy a few days later on September 30th. Again it takes off very nicely, and it's now at new all-time records. So 65% gain again. Congratulations to the subscribers. Very easy, you can see. I'm not really thinking, I'm just following my algo. Algo works really well. We have tested it multiple on many different securities over different time frames. Stocks should be traded on daily though. Okay, switching gears, DXY dollar currency index. I kept talking about how it's bottoming. I think it might be bottoming. Today's action was extremely encouraging. Big gain, 73% gain. So looking into the future again, I'm projecting my indicators into the future. You can see how narrow it is becoming. You can see that the indicators are curving down. So what this means is the price is right now, not that far off from the future bullish levels. So this is making my case for bottoming of the dollar stronger and stronger, especially, we're looking in July here. So let's see. It looks really like it's about to switch into a bull trend. Next few months will be crucial. Perhaps gold is already feeling it. I think gold is already feeling it. I'm actually short gold. Gold entered the bear market where I'm hovering on 8th of March. It could still retest 1822. It's a great level to again sell it short, but it could also just collapse here, especially if dollar decides to continue higher. The reason being is, of course, is XAU over USD. So dollar expressed in gold expressed in dollars. So if the lower part of this equation gets stronger, it will pull this currency pair down. You see, USDJPY, this one I wanted to highlight in favor of US dollar. Two trades. So two trades. One trade happened right there, 9th of March, definitely profitable. Another trade, 22nd of April, definitely profitable as well. So this is perhaps beginning of the bottom of the dollar, because you can see USDJPY is now in favor of USD. So it's one of the currencies within the dollar index. And USDCAD also finally, this is the last for today. I wanted to show that this is look how crazy weak the dollar, United States dollar, is against USD Canadian dollar. This was an actual alert back in June, and then another one in 2015. In June of 2020 rather. It collapsed in our favor, so this would have been a short. You go one way or the other, so you can go long or short. In this case, you can go short, and this is 1,300 pips. Oh my God, this is a huge gain. So if you held on to now, I am thinking that we're somewhere near the bottom. This type of huge moves rarely happen, and I'm looking at this and I'm like, this has to be very close to the bottom. So if you're a kind of counter trend trader, you should be getting very itchy to buy this. All right, let's see if I'm missing anything. That's it. So the rest of the stacks like oil, natural gas, Canadian dollar, Bitcoin, all of these stacks I'm gonna cover in my subscribed in a paid newsletter. You can see there's a lot of stacks here. Very cool stacks. Things like Brazilian stacks. There's energy transfer partners. There's a lot of biotech companies that I trade. You can find out more by going to MasterChartsTrading.com. I simplified the layout a little bit. I think it's a little bit cleaner now. Let me know what you guys think. So basically I have two products and I have another third product which is separate, just for ease of use. So I got the trading indicators, which are these lines, the green, blue, red, and yellow lines. What can you do with them? You can do many things. For example, make a lot of money first of all by finding the, for example, breakouts or breakdowns. You can also use them for trailing. So like, for example, I use the blue line to trail higher, I use the red line to trail lower. There are multiple uses to this indicators. Again, 7-day free trial. And then also I have two newsletters. I have the elite newsletter, which kind of follows a set list, about 100 different securities, and I have a stock speculator newsletter, which kind of has different stocks all the time, and we trade different stocks there. So do sign up for that. The prices has also been adjusted, so that I think it's in a perfect spot right now. And then the advanced stock screener. So if you're interested in having more alerts, you can have literally hundreds of opportunities per day. So you can see this is about how many per day you will receive from each of this list. So for example, NASDAQ 100 will give you about 4 alerts. So it's about 4% per list. Me personally, I like a lot this list, all stocks with options. So this is mostly what I trade on, and I get 138 alerts per day, and then I have to filter out. And this is why I have those newsletters, so that they, so that you don't have to kind of sit there and see how many. I already filtered it for you, in other words. So alright, so again, let me know if you have any questions, and thanks for watching, and I'll see you at the subscribed list. Thanks, bye bye.